Welcome back to Bunnex Investment Group. In this video, we are going to talk about a very simple trading strategy. Why do we always talk about strategies? That's the basis of profitable trading. Along all these strategies that we discuss on this channel, you should find one that resonates with you. So without further ado, let's jump into the video. How are we going to trade with this particular strategy? We need to first identify the trend of yesterday. If today is this day, we will be identifying that trend from this particular day. After identification of the trend, we need to check the Asian session range. What is the Asian session range? It's actually a period that initiates a day of trading. Basically, the Asian session range should be 50 pips or less, right? Let's have examples of what I mean. In this particular case, we can see that we actually had this particular day. It was the 10th of October 2023. The first thing is to check if this day was actually an uptrend or a downtrend. So what we are going to do is we are going to see the opening price of that day and then the closing price of that particular day. We can see that the opening was actually at this point, which is lower than the closing price. Therefore, our validation of trend is going to be uptrend. By saying uptrend, we are going to be looking for setups that are in line with this particular trend. On the following day, which is the 11th of October, moving forward, our next thing is to verify the Asian session range. Is the Asian session range 50 pips or less? And if that's the case, we can actually proceed to look for setups. In this particular case, we can see the Asian session range. In my case, it starts at 12 midnight and ends around 7 o'clock in the morning. In this particular case, we can see it was actually less than 50 pips. Let's measure it to verify its length. We can see it was around 23 to 25 pips, which is the convenient number of pips for an Asian session range for a valid trading day. So after that, we are now going to look for a pattern. A pattern is going to be a W pattern for an upward trend of yesterday's flow, or an M pattern for a downward trend of yesterday's flow. So in this case, we had an uptrend on yesterday's flow, and what we were going to look for was going to be a W pattern. In this particular case, we can see the first leg and the second leg. Mind you, if you are not seeing this pattern clearly, you better skip trading for that particular day or that particular time frame or that particular pair. So in this case, we can see there was actually a proper pattern that was in front of us. It should be nameable. If you get a kindergarten student, they should be able to tell you that this is a W pattern. After that, first leg was issued, pull back to the upside. We need to see a candlestick reversal pattern on the first leg level. So what is the first leg level? We can see this is the first leg level. When the market came back to the first leg level, we start to look for a candlestick reversal pattern. There were rejection candlesticks that were issued here, and always our stop loss should be below structure and our take profit should be on positive reward side. In this particular case, a 2-to-1 was going to be satisfied and the market went our way. On this day, we had an uptrend, which was a day of trading, and on the following day we were going to look again for a possible buy entry. However, this is what happened. It became a downtrend because the opening price, or the highest price that you can see, is actually giving us a negative variance to the closing price, meaning this was a day of drop or a downward trend. So on the following day, we are going to look for an M pattern. First, we need to see the Asian session. Is it going to satisfy what we need to see? In this particular case, we can see that the Asian session was going to be, like in this case, let me check the time. It was actually going to be within our range, because we've said our Asian session should be at least 50 to 50 pips and below. In this case, we had this particular scenario. So this became our first leg, which became the high of that Asian session range. Our first leg level is where we look for a candlestick reversal pattern. The market went to the downside, it came back to this particular point, and it gave us a bearish engulfing pattern. A 2-to-1 reward to risk was going to be met because the flow was enough to satisfy that. So this was a downward trend, an M was being, we looked for an M, and then we can see the market actually changed direction again. And in this particular case, we were going to look for a W pattern. Since this was a day of rise, we can see the Asian session also satisfied what we look for, and in this case a W was actually issued, first leg and then second leg. This was now works of the market makers, whereby they manipulate price by using fundamentals. It was actually a clearing of the board by fundamentals, and we know that if this happens, we need to look for re-entry, because usually it will be a spike to take you out of the trade, and the market goes on to where it had planned first in the first place. So it was actually a pattern. So basically we've called this strategy an up a one pair one setup strategy, because you are only going to be looking for these parameters each and every day on your pair of choice. So you might love Euro JPY as I have been using, you might love GBP JPY or GBP US, or even gold, depending on your preference. All you need to be doing is to be consistent with the rules. On that note, we've come to the end of our today's video. I'll see you in the next one, and have a blessed day.